crude oil prices yesterday declined and went into the negative territory. For the first time in the history of financial market, we've seen such kind of phenomenon where the prices of commodity has gone into negative. So what we've learned in the textbook, the crude oil market has completely defined that. We've seen crude oil prices trading at one point at minus $40. But these are very uncertain times, and what we are seeing, we have never seen such scenario in the financial market where the entire world, one after another country is on the lockdown. So this kind of scenario is also taking place for the first time in the market, and we've seen something very strange. The Nirmal NYMEX contract went down and tested levels of minus $40 at morning, which was trading. I think we've seen more than 300% downside in crude oil in a matter of days. So this is more to do with the financial squeeze than the actual demand-supply scenario. Yesterday was the expiry, and for the first time, we've seen that most in US, in Canada, most of the capacity to store oil is virtually full. So if somebody has to take the delivery, they cannot take the delivery because of the lockdown and the logistic issue arising out of it, and the logistic cost also involved. So that is one of the main reasons why oil prices crashed during the expiry. And another reason was financial squeeze. Most of the traders who were long and wanted delivery, they could not. They were forced to spare off their positions. So this is the road ahead from here would be that the producers will have to cut more production, because what has happened with, on account of lockdown is that we've seen crude oil, because of the lockdown, we've seen that the demand of crude oil has went down by more than 25 to 30%. So in a market of $102 million per barrel, we've seen the demand dropping by 25 or 30, between 25 to 50 million barrels per day. And the production cut will start from the month of May. So the overall surplus at the start of the year for crude oil was just 1 million barrels per day. That surplus is soared to 20 to 25 million barrels per day. So where you are going to store oil? As far as US crude oil are concerned, in US, NYMEX delivery point is Cushing, Oklahoma, and the capacity over there is 92 million barrels, and out of which already 72 million barrels is full. In one month, in Cushing, Oklahoma, crude oil stocks rose from 30 million barrels to 72 million barrels. So how this is going to sustain going forward? That was the big question. There is no storage capacity to store oil. In Canada also the same scenario has emerged. And hence crude oil futures are likely to remain very volatile. President Trump has asked the US Congress to allow them to buy crude oil and store it. I don't know whether it is going to take place or not, but I think until and unless we see a major announcement which indicates that there will be more production cut, then only this market can survive and sustain. Otherwise, I don't see this market will sustain. So I think in near term, the pressure is likely to continue even on the 4-month contract. But the moment you see announcement of more production cut, or in the month of May, where the lockdown is getting lifted up and the gradually demand is coming back and the production cut takes effect, so that time you will see a gradual recovery taking place in crude oil.